Inflation is a term we hear often, but what exactly is it and why does it happen? Simply put, inflation is the rate at which the general level of prices for goods and services rises, which consequently decreases the purchasing power of a currency. But what causes inflation? There are a few key factors. Firstly, let's talk about demand pull inflation. This occurs when the demand for goods and services exceeds their supply. Imagine a new smartphone hits the market and everyone wants to buy it. If the production doesn't meet the demand, the price of that smartphone will likely go up. This is a classic example of demand pull inflation at work. Next, we have cost push inflation. This happens when the cost to produce goods and services increases, therefore pushing up prices. Think of a situation where raw materials become more expensive. If it suddenly costs more to produce bread because of a rise in wheat prices, bakeries might raise the price of bread to maintain their profit margins. Another factor is built-in inflation, which is linked to the expectations of future inflation. When workers expect prices to keep rising, they demand higher wages. Companies, in turn, pass these increased labor costs on to consumers through higher prices, creating a cycle of inflation. The role of central banks, particularly through monetary policy, also influences inflation. When central banks print more money, there's more money circulating in the economy. More money chasing the same amount of goods and services can lead to higher prices. It's crucial for central banks to manage this carefully to maintain economic stability. External factors can also trigger inflation. Events like natural disasters, geopolitical tensions, or even pandemics can disrupt supply chains, leading to shortages and price hikes. Lastly, inflation is not inherently bad. Moderate inflation is a sign of a growing economy, encouraging spending and investment. However, runaway inflation, known as hyperinflation, can devastate economies, as seen in historical examples like Zimbabwe in the late 2000s. In conclusion, inflation is a complex phenomenon influenced by various factors, from supply and demand dynamics to monetary policies and global events. Understanding these can help us grasp why prices fluctuate and how it affects our daily lives.